Assalamu alaikum. I am Tabish Khanzada, your host with Canadian Taxes Today. We have with us our guest, Mr. Malik Hamid Iqbal. Assalamu alaikum.
Wa alaikum assalam.
Mr. Malik is highly educated and very experienced in his field. You can contact him directly as well. His number is 647-299-3956, or you can email him at taxes.can@gmail.com. He's associated with M&N Chartered Accountant Inc. So before we go ahead with our topic today, let's learn a little bit about his firm.
M&N Associates Chartered Accountants is a full service accounting firm, and we have designated accountants and IT professionals. As far as my qualifications are concerned, you have very kindly mentioned it, and they are also being shown on the screen as well. The purpose of this program when we started it with e-Awaaz was that what should we provide, what information we should provide to our community and viewers which would be useful for them. So we decided that taxes, since taxes season is coming, everybody would be submitting his tax return. So we should provide a guideline on these taxes, and these are main guidelines. So I would suggest, highly recommend that whenever our viewers are using these guidelines, they should seek professional help so that they can utilize these credits and benefits to the maximum purpose, maximum benefit for themselves. And since each situation is different, each person is different, so these credits and these guidelines have to be applied as per different situations. So it is always better to seek guidance from the professionals. Our services, we do individual taxes, corporate taxes. When we say that corporate taxes and individual taxes, we have a different point of view when we are doing corporate taxes and individual taxes. When we do individual taxes, we make sure that our clients get maximum tax refund. And when we are doing corporate taxes, we make sure that the information which is recorded in the system and whatever expenses are recorded, they are in line with the CRA guidelines. And if at any time CRA wants to audit it, they should not have any problem. And it should be straightforward, and whatever is required by law, that should be done the same way. So we make sure that the services we are doing are bookkeeping and payroll, GST, HST returns, new business setup. When I say new business setup, this includes making business plans, feasibility studies for our clients, and getting registered by CRA, the payroll numbers and everything. And also we help them and guide our clients to what documents are to be maintained, so that if CRA comes back, they can provide those information at the right time. We also do audit representation. If any of our client is being audited by CRA, we help our client to generate those information so that CRA gets what is required and the client's record also gets straightened out. So these are main services which we provide.
Great. So our viewers can contact you if they have any of these services that they require.
Oh, definitely, definitely.
So you can contact Mr. Malik at 647-299-3956, or you can also email him at taxes.can@gmail.com. So let's go ahead with our topic today.
Yeah, today we are going to discuss adoption expenses.
Okay.
And last time in the last our program, we discussed regarding relationships, and when the relationship breaks down, what happens. And today it is related to in a way to same things, that adoption expenses. Adoption expenses, there are a lot of expenses which can be claimed, and that can impact the total tax liability. So what is adoption? It is if a family wants to adopt a child from within the country or from sometimes outside of the country. So any expenses related to that which are, and this adoption period, it starts when application is submitted to the court or to any agency or government agency, and it ends when the child starts living with the taxpayer, or the court issues an order that okay, this is the condition. So in those cases, that adoption periods ends. Now, what are the expenses which are covered? We'll go briefly on those. Expenses include adoption fee to the agency, or legal fee if it is required, to the lawyer, or court fees. These are all covered. And if the taxpayer has to pay anything outside the country from where the child is coming, those charges are also deductible.
Great.
Travel expenses and other incidental expenses are also food and lodging and all that for the time they stay there. And when the child comes in, then the whole process gets completed.
Great. We have a question before we go for our break.
Sure.
Mr. Subhash wants to adopt a child from India, and he's wondering if he can deduct the travel and legal expenses.
Yes, he is bringing the child from India. Yes, all those expenses which are legal expenses, lawyer fee, if there are any agency fee, that would be, he would be able to deduct it. And of course, travel expenses and lodging expenses, there would be. But they should come up and seek the help, so that we can guide them what are the expenses which can really be claimed.
Absolutely. Thank you. We'll be right back with our break. Assalamu alaikum. We are back after our break. Let's continue discussing about childcare expenses and adoption expenses with Mr. Malik.
Childcare expenses, these are, in many instances, these are not deductible.
Okay.
But there are conditions when they are deductible. For example, if somebody is working or he is self-employed and he is involved in the work, and at that time child needs to be taken care or by somebody. So though if he incurs those expenses, then of course they are deductible. Similarly, if a taxpayer is conducting some research, then these are deductible. Attending school, if spouse or he himself is attending school, then these childcare expenses are deductible. These are deductible for eligible child. Now, what is eligible child? It is spouse child or his own taxpayer's child. So those children, they are
eligible.
Exactly, they are eligible childs. Now, what are eligible expenses? So babysitting, boarding schools, childcare expenses, daycare expenses, all these are included in the childcare expenses. Now, these expenses are deductible when they are incurred. Now, what I mean, what does that mean?
Right.
Is that, for example, if we take December, in the month of December, the childcare expenses are incurred, but they would be paid in the month of January.
Right.
So let's say it is 2018 December, and the payment is done in 2019. So they have to be charged in 2018, not in 19. So when they are incurred, so they were incurred in December of this year, last year, so they would be paid, they would be deducted on the tax return for 2018, not 2019. And these expenses are to be claimed by the person who has a lower income. Both spouse, whoever has a lower income, he would be claiming it. There are instances, this is a general condition that they should be deducting whoever has lower income, but there are conditions when higher income spouse can deduct those. And the conditions are that if his spouse or he himself was attending a school, then higher income. School could be part-time, full-time, or the spouse is incapable of taking the child, caring the child. And that means that he or she is sick
Right.
or physically impaired or infirm, and that is the reason. So that can be then now can be deducted from the higher income spouse. Or they are separated or divorced because of breakdown of relationship. So in those cases also it could be deducted from the higher income spouse. And in case spouse was in prison for at least 2 weeks,
Okay.
then also it could be deducted from the higher income.
Great. We have a question here. Sabina wants to know that if she and her husband, they're both attending school, and she's wondering if they can deduct the child care expenses.
Yes, they can deduct childcare expenses, and if they were attending school, so a higher income individual can deduct it. But again, it is better to discuss this
Absolutely.
with the tax specialist.
Absolutely. We have some questions from the topics that we had covered in our previous programs. Is it okay if we take some of them up?
Sure, please.
Great. So there's a question about RESP. Mr. Faisal is asking about his son. He wants to find out that his son is getting EAP, which is Education Assistance Payment, from his RESP. And he's wondering how these payments are treated in tax return.
Okay, there are two things, RRSP and RESP.
Right.
RRSP, when somebody buys RRSP, his total income, RRSP is deducted from total income, and the
Right.
tax is reduced. So in other words, tax is deferred actually. So he would be paying taxes when he withdraws RRSP. The case is very different in RESP. RESP is purchased after it is the income has been taxed, and then whatever is with him, he is buying RESP from that. So in other words, whatever RESP has been bought, the tax has already been paid.
Right.
So now, when the child gets this payment back, the RESP, whoever is managing that company or that promoter, whoever is managing that, they would be issuing a slip T4A.
Okay.
And they would be mentioning that how much of this is principal and how much of this is income.
Okay.
So the income would be taxable, but the principal amount will not be taxable because taxes have already been paid
Right.
earlier,
Right.
and that will not be taxed, and only this income, whatever income has been generated on that, would be taxed.
Okay.
So this is how that would be treated in tax return.
Mr. Fahim wants to know that he has invested $30,000 and the interest will be paid after 5 years at the rate of 6%. Should he report the interest in the 5th year on his tax return?
This is investment income, and in investment income, it has to be paid when it is accrued.
Okay.
So, though the money would be paid after 5 years or 6 years, 5th year I think, right? After 5th year, the money would be, actual money would be paid on after 5th year, but he has to report it on every anniversary. Whenever he is bought, his 1 year is completed, so that 6% he has to calculate, or he would be getting a slip that this much money is accrued. So he has to report those every year, not the 6th year or 5th year.
Oh, okay.
Right. So it has to be when it is accrued.
Okay. And last question. There's an anonymous question, and they're saying that they have got $30,000 loan from a neighbor, and $30,000 loan from the employer for buying a house, and they're asking if this amount will be added to the income.
Some employers, they provide these facilities to their employees. So what happens that when they provide this facility, they get that benefit that it is non-interest bearing loan.
Okay.
Right? So they have to return it back. So once this money is going to be returned back, it will not be income because he has to pay it back.
Right.
Now, the only thing is that if he had taken this money from a bank or any other institution, he would have paid interest. So CRA prescribes every year some rate of interest.
Right.
That okay, this is the rate of interest. So on that rate of interest, this money has to be calculated, that how much rate of interest as per CRA's prescribed rate, that interest would be added to his or her income.
Okay.
And then that would be taxed. So that $30,000, that will not be taxed.
Okay. We have actually one more question, if that's okay.
Sure.
Sheila is getting $2,000 rent on her property, which is in Kitchener. She's wondering if she can deduct her principal amount of mortgage against this rent.
It is a similar question as this $30,000 because $2,000 she is getting rent.
Right.
And she can deduct expenses, whatever for that property, they are related to that property. She can deduct those expenses. But since mortgage is not for maintaining that property, rather it is a principal, it is an asset for her. So she is paying the cost of that asset. The interest, yes, the interest on this property, on the mortgage, that can be deducted, but not the principal amount. So principal amount will not be deducted. Yes, interest can be deducted from there.
Okay, thank you very much, Mr. Malik.
Thank you. Okay, so
I hope that you guys learned a lot today. I will highly recommend all of our viewers to contact Mr. Malik so he can guide you exactly properly according to your particular situation. We will meet you again next week. Until then, if you have any questions or you need some guidance regarding taxes, please call Mr. Malik at 647-299-3956, or you can also email him at taxes.can@gmail.com. Thank you very much. Take care of yourself. Until next Monday, we will meet again. Assalamu alaikum.